Hello everyone. Welcome to Indian Economy by Aman Soni. In today's news hour, we shall be discussing the important articles related to economy from the Hindu newspaper. In page 1, manufacturing quickens, input cost rise shows the purchasing managers index. Under the purchasing managers index, as the name suggests, under the survey, the opinion of the purchasing managers, that is the managers in the companies who are involved in the purchasing and manufacturing, the information would be collected based on number of orders that they are going to expect in future, number of sales that the company is going to expect, and how much is the raw material that they are purchasing, and how much is the production that has been happening. And based on that, a trend would be plotted, and any score more than 50 means that the activity in the economy is increasing. Any score less than 50 means that the activity in the economy has fallen. So now the purchasing managers index has rose from 54 to 54.7 currently. That means the economic activity has been increasing, and the purchasing managers feel that there is going to be good demand in future, and that is why they are currently producing more. And what are the various reasons for increase in the purchasing managers index? Increase in the new export orders because of opening up of the all the restrictions and reduction in the pandemic. And the other reason for increase in the prices is rising commodity prices, which increase the input costs. So the rate at which the producers passed on the increased cost to the consumers, that also increased. At the same time, there is a downside, that is the consumer goods segment, wherein the consumer's goods segment has showed a contraction, that is mainly because of rising commodity prices and the increase in retail prices and low rural consumption demand. In the editorial page, there is an article about the GST revenues. In yesterday's news hour, we discussed about how the GST revenue in this month has increased to a new high. It has almost reached to 1.67 lakh crore collection, and in the last 4 months the GST collections increased to fresh highs 3 times. That is, compared to the 3 times, it broke the records of the previous record 3 times continuously. And overall there has been a 20% increase year on year compared to last year. And we discussed one of the reasons is probably increase of the GST on the imported goods, which is not directly beneficial for the domestic economy, and the other reason being increase in the input costs and retail costs. We just discussed under the purchasing managers index that the manufacturers and retailers, they have been passing on to the increased prices quickly to the consumers, because of which the final price of the product is getting high, and whatever percentage of GST on the increased cost would mean that more collections for the government. And the editorial talks about the compensation cess issue, and the compensation cess would be levied till 2026, and even though it is levied till 2026, because of the pandemic it has been extended, and all that amount will be used to pay back the borrowings that the government went through during the pandemic time, especially to reduce the revenue shortfall of the states, and to recompensate the states. And currently, even now, the central government has to pay the state governments to the extent of 78,700 odd crores when it comes to only compensation cess. And the central government is saying that there is inadequate balance in the compensation cess fund, and whenever with the increase in GST collections, and whenever they get more money, they would be releasing the funds to the states in a timely manner. And what are the reasons for increase? The reasons for the higher tax flows are improved compliance and the flexibility in approach of the GST. And probably the GST council has to rethink the rates, because when the GST was introduced, it was said that the revenue rates are going to be neutral. Now, even though the economic activity is not that much improved, we are getting revenues higher and higher every month. So that means that probably the GST rates are just higher. So in fact, if the rates are just higher, probably if we going to reduce that in future, that means more consumption, more money in the hands of people for consumption, because the rates that we are going to charge will be less in the future, and that would mean more economic growth. So that is why the government has to rethink whether the rates that they are charging is rational and it's going to be revenue neutral, or they are charged highly just to generate more revenue. And as we discussed, one of the main problems is the increased input costs and the manufacturers and retailers passing on the cost to the consumers, because of which the GST rates have increased. And the other major reason being the GST from the imports also increasing. It almost increased by 30% year on year basis. And probably now, only when we have the data for the breakup to see how much of the GST collection is because of the increase in imports and how much is because of the domestic consumption, we would know. Until then, we'll just have to look at the overall figure. And still, various problems persist, especially the external situation, the Russia-Ukraine conflict, increasing crude oil prices, increasing raw material prices, especially the fertilizer and edible oil sector, and the rural consumption demand. The government has to take steps to kickstart the rural consumption demand. Otherwise, the entire economy is going to have the repercussions in the coming future. This editorial here, it discusses about the electronic vehicles and the recent battery incidents it took place. Almost more than 11 lakh electric vehicles and battery operated vehicles have been registered in India. The data is taken from the Vahan database of the Ministry of Transport. And one of the main reasons is that because of increase in demand, almost 11 lakh electric vehicles have been sold because of investment in technology, and over a period because of the better technology, economies of scale, the cost of the battery has come down. For a EV vehicle, the main cost is because of the battery cost, and the lithium ion battery cost compared to the 2010 levels almost have reduced by 89%. So you can see how affordable the electronic vehicles have become compared to the last 11-12 years. And with various governments going for the climate change commitments, we need to incentivize the EV sector to adopt for a faster pace. But at the same time, even though it has various environmental benefits, there are various problems. That is, the technology is still not yet highly developed. It is still in nascent stage, and the problems that we are seeing currently is the problem of problem of safety and security of the life of the person who is using the electric vehicles. Recently, we have been reading about the news about how the batteries are getting exploded and some people lost lives, and the government forced the companies to recall the batteries. And the battery fires occur mainly due to the convergence of heat, oxygen and fuel in the vehicle. So for that, what we need to do, how should we able to be solve this problem? For that, we need to invest heavily on research and development, especially the engineering, wherein we need to design a more safety manner so that the cutting corner approach, wherein we focus on reducing the cost by giving up on the safety. We need to reduce this cutting corner approach and we need to go for safety approach, wherein even though the cost might increase because of the higher safety precision, we still have to spend that amount, because without the necessary feature of safety, nobody is going to buy. Now because the vehicles are getting exploded, it creates a dent in the consumer image about the EV vehicles, and probably all those people who were probably thinking of buying the EV vehicles, even they would be discouraged looking at these incidents. That is why even though currently the cost is slightly higher, we still have to invest heavily on the safety aspect. Then comes the cost aspect, and probably we need to invest in various technologies like the solid state electrolytes, special safety switches, and we also need to have regulations for the ensuring the safety and certification standards. The Ministry of Transport also said that because currently there are no guidelines related to EVs, they would come up with a compliance guidelines in the future and specific safety norms for the vehicles. This is a growing sector with lot of potential, but adequate safety norms have to be introduced, without which the image of the electronic vehicles in the consumer's mind, that would get affected and people would not go for the electric vehicles in the near future if the safety incidents keep happening again and again. In the world page, we have a news about Apple and antitrust. The European Union has accused Apple of blocking its rivals from its popular iPhone payment system. So the accusation is that under the Apple Pay, only Apple Pay, that is the Apple's subsidiary, it is getting beneficial access in the Apple devices, and all other competitors, they are not getting beneficial access. And the banks had complained that they had to pay additional fees in order to get the access. This is against the fair competition laws, and there is a law in Europe called the Digital Market Acts, which is a landmark European Union law which will prohibit other Apple and other US technology giants from privileging their own services in its products and platforms. For example, now Apple has the hardware, which is the iPhone, and here it is giving beneficial access to Apple Pay because the hardware is of iPhone, and because it is giving beneficial access to iPhone users. This is wrong on part of Apple, because for example, take Google Pay. If Apple is giving beneficial access to Apple Pay and not Google Pay, just because Google Pay it's the competitor's product and Apple Pay is their own product, that is against the fair competition norms. Just because you're the manufacturer of hardware and manufacturer of software, you cannot give special access to your own product. That is against the trust laws in the business. That is why it is called antitrust charge. In the business page, we can skip this news related to HDFC. This Tata Steel news we can skip. Power use rises in April, especially every summer, because of the increase in consumption for cooling and the pickup in the domestic economy. The production of electricity in summer will increase because of the increase in demand. And this news is directly related to this news, wherein it says that the coal supply to the electric sector rose. We just discussed that in summer the demand for electricity will be higher, because of which the power generation has to take place. And India majorly depends on coal for electricity production. So it is obvious that the coal supply to electricity sector will increase. So you can see how one news is related to other news. We have to interlink while reading, and that is where we will properly understand and get the conceptual clarity and how the overall economy works. We can skip this news about loans. We can skip this news. Here, LIC IPO anchor investor quota oversubscribed. Oversubscription of an IPO means that more than the number of shares that you are going to subscribe, the people have subscribed. That is, people showed more demand for the shares. That is the oversubscription. Undersubscription is when you want to sell some X amount, if people subscribe less than that amount, that is undersubscription. Here the crucial concept is anchor investor. See, in every IPO there will be certain quota given for qualified institutional investors and for the individual investors. So under the qualified institutional investors, one of the major quota will be given to the anchor investors. Who are anchor investors? Anchor investors are those type of institutional investors, for example, foreign portfolio investors, mutual funds, banks, all these type of investors who would be given allotment before the allotments open for the public offer. Before the IPO, just before the IPO, these people would be allotted shares. And once the shares have been allotted, there are certain restrictions that for 30 days they cannot sell 50% of the allotted share, and for next 90 days they cannot sell the another 50% of the allotted shares, etc. In order to make sure that the shares are properly subscribed and the individual capacity to invest huge amount into the shares would be limited, that is why more amount would be given to the qualified institutional investors, because the financial heft of the qualified institutional investors would be more. So anchor investors would be given allotted shares before the subscription opens to the retail investors in the market through the IPO. That's about news today. Thank you so much.